candle is 1 hour. Only after 2 hours you would be making unbelievable profit, because from 65.80, let's say, to 67.50 around here in 2 hours, that is 170 pips in 2 hours, and that is a lot of money. This is an example from the hourly chart. Of course, you can see on the screen the time frame, and of course you can see it here because I use TradingView. TradingView always gives you an idea about the instrument and the time frame in the background of the chart. Another example is from the 4-hour chart, and this time it is the euro yen 4-hour. The price drops and drops and drops and drops. Here finally we see the first real recovery attempt. We have seen some modest recovery attempts here and there, but here we find the first real one, and the price rises for more than 200 pips in order to touch the 38% level, and from there it falls and give us an amazing opportunity to go short. I don't want to go into the technicals here, it's just an example to see. We'll be talking about the technicals of the entry point later on, but just by looking at the RSI here with the touch of 38% level, this combination is very encouraging of a short position. Okay, again the price tried, and this time tried to push past the 38% level and failed. And as we will talk about in a few minutes, failing twice at the same retracement level is something that is that usually gives us excellent points of entry. So we failed once and we failed twice, and the price dropped like a stone. Okay, this is the crude oil chart, daily chart, and this is a very recent chart. We have seen the price moves higher from June. In July we got our top, and from there we started falling down, but this time the 38% did not do it, the 50% did not do it. It needed the intervention of the 62%, or the magical or divine ratio, as some people call it, in order to push the price lower. And if you had a short, if you were lucky enough to have a short position at the 61% level, just imagine what kind of profit you would be making in a few days. You know, this each candle is 1 day, so you needed about a week or something like that to make an astonishing profit of more than 500-600 pips, because the Fibonacci level was 60.50, around 60.50, and we have came close to 54 around here, so we are talking about more than 600 pips. Okay guys, just give me a minute to look at the chat. Renko is asking, tell me how to get the 100 pips per month. 100, or I don't, yeah, 1000. There's a correction. Well, Renko, I was just saying while on this chart that a short at the Fibonacci 61.8 level has made almost 600 pips in 1 week. So this is one of the opportunities that can help you very much make $1,000 or 1,000 pips a month. But to be objective, you know, one technique will not help you make 1,000 pips a month. You need to be familiarized with a lot of techniques, with how to read the charts. You know, I really believe technical analysis. I believe that technical analysis works very well most of the time. Of course, if you were with us before, we said that technical analysis deals with probabilities and never certainties. That last comment, okay. Okay, you don't believe this? Okay, it's your opinion. It's okay, no problem. But technical analysis works with probabilities, and this is why sometimes people come to this market with the wrong expectations. They think that every time Fibonacci will provide them with a chance to make money. every time moving averages will provide them with a chance to make money, and every time a trend breaks, they will make money. And with the first or second loss while using these techniques, they think that it will not work, and will start talking badly about technical analysis, a science and an art that has been there for at least 130 years. If not much older than that, because, for example, the Japanese candlesticks were used more than 400 years ago in the rice market, and people used them to make a lot of profit there. And in the West, of course, Charles Dow started in the late of the 19th century, and here we are 130 years after that, talking about technical analysis. If it did not make profit, if it did not help us make better market decisions, why would the world be talking about this for more than a century? It does not make any kind of sense. So with that, you always have to understand that there's no magic, and I said this before. I quoted my favorite author, Martin Pring, who said there is no holy grail. If you're looking for a technique that works 100% of the time, you're wasting your time. You don't belong here. This is a market. Nothing works 100% of the time, because there is a large number of factors that work together in order to provide the price moves. If you think that there is one technique that can guess the effect of all these factors all the time, you are dead wrong. You need a technique that can gives you around 70-80% accuracy. If I have a technique that makes money on 8 trades out of 10, why do I need to run after and chase dreams and myths about the 100% accuracy? Why would I need to do that? If I get in the market, every 10 times I make money on 7 or 8. And when I make money, let's say I make 50 pips on every one of these trades, and I lose 50 pips on the 2 or 3 trades that are losing in my 10 trade group, why would I need anything better than that? You know, it's good enough. 70, 80, 85, 75%. That's the best you can get with technical analysis. You know, you are reaching 80% accuracy after many years. I don't expect any rookies, any beginners to hit the 80% accuracy within the first year of trading. That happens maybe to a one person in 10,000. But after a few years, and after learning about many techniques and learning how to combine these techniques together, Renko, this is to you. You will be able to make money and to make trades that make you money 80% of the time or 75% of the time, and still they don't work at 20 or 25% of the time. Nobody does better than that. You have to understand this. Nobody does better than that. And you do not need to do better than that. We have seen many quotes from George Soros and Warren Buffett, people who are extremely successful, who made billions of dollars. For example, George Soros says that, I do not remember the quote exactly, but the meaning of the quote is that predicting the financial markets can go wrong. So you always have to be prepared for plan B. This is what he said, you know. So if you come to this business with a mentality that no, I need a 100% accuracy, you do not belong here. Simple as that.